Good afternoon and welcome to GrainTV. Today's Friday, October 21st for the weekly wrap-up. Kevin, we saw corn up 8, wheat up 8, and we saw beans really taking on the chin this week, down 56 cents. What's driving that bean market lower right now?
You know, Logan, the bean market just got hammered. There were several factors driving beans lower. One is just the dismal export sales we've been having. We've been losing that business over the last few months to South America, and there just seems to be no shifting of the tide here. Even with our harvest underway, normally this time of year we see export sales pick up. This year, not so much, and the bean market's taking it on the chin, as you say. The other news that came out this week that hampered beans was China. Weak economic growth, not necessarily overall weakness, but weaker than what analysts expected. Obviously, China is the major buyer of our beans. Any weakness there is perceived as negative in the bean market. The other thing, obviously, now that we've got the U.S. crop harvested, we're now turning our attention in the bean market to South America, and South America's weather is starting to show signs of life with some timely rains. What are you seeing down in South America, Logan?
Yeah, absolutely. We'll take a look at this map provided by our friends here at Planalytics. You can see that down in Argentina, this area with the circle around it, A, they've received some good precipitation recently. This map actually measures greenness, blue being more green, brown meaning that's drying out. You can see that they've needed a little bit of moisture up in Brazil, and we should be seeing some blue come into the Brazil region next week as they got some much needed precipitation earlier this week, not reflective in this map. I got to think that's going to weigh on Chicago.
Yeah, I think the conditions in South America are improving. They're getting timely rains, 1 to 3 inches of rain in the last week, with more expected on the horizon. Again, more negative fodder for the bean market here domestically. Logan, what are you seeing in the cash market for beans?
Yeah. Well, a little bit different than what we're seeing in the futures market. We are seeing, I guess, one bright spot for the beans right now is the cash market. We saw since October 1, we're up 17 cents. We saw a lot of strength around the Mississippi River Valley, helped out a lot by strength out of the Gulf. And over the same time period, we also saw barge rates take a little bit of a decline, which is a little bit unusual for this time of year with harvest in full swing. We saw those down 6 cents.
Yeah, and I think, not only do you got the weakness in the barge rates, you got a little bit of a lift out of the Gulf, but you also got farmers looking at massive losses on the board. As they're approaching harvest, they're saying, why should I sell to the cash market right now? They're holding tight to it. And I think that's going to be the game this year, is the basis is going to respond to futures changes, and will farmers liquidate their crops into the cash market and feed those pipeline supplies. So right now, the pipeline supplies are a little tight still. Farmers are holding tight to that crop.
Absolutely. Well, I think with that, we're going to take a quick commercial, and we'll be back in just a sec.
Welcome back. Logan, we had a positive week for corn, but although it was positive, there were some negative factors that were going on in the corn market. What did you see on the charts as you're looking at it?
Yeah, absolutely. Well, let's take a look here at the FireTip platform here. If you go online, you can take a demo of this platform, get it in your home right now. And right now we're looking at the December corn chart. So if we go here, here's looking at just the last week. 3 out of the last 5 days this week, we saw corn trade above the 650 level. We saw a lot of selling come back into the market and push it down. We weren't able to close above 650 all week. And today we formed a unique technical indicator. It's actually called a gravestone. And you can see that here we opened at about 649.5. We traded up about 15 cents, and we closed hard right down at the very same level that we started the day at. And I got to think that this is going to be this is a very bearish signal, and it can't be helping out this corn chart at all right now.
Yeah, exactly. When the market advances higher like that in the intraday session and then closes down, as you said, making this gravestone, that's a pretty negative signal for the market right now. What are we seeing in the cash markets in terms of carry? Is there any opportunities for farmers? We're looking at things that are fairly negative on the futures front. We're looking at negative fundamentals out of South America. We're looking at technical indicators that are negative. What about on the cash side of the equation, Logan?
Yeah, absolutely. Well, right here we're looking at a chart. This shows the cost to carry You can see that on October 3rd, there was more carry built into this market than what we're seeing right now. And we've seen it collapse since October 3rd. Now might be a good time for producers to be capturing some of that basis, especially in the corn market.
Right. And I think, what we're seeing is the market really back off on those forward carries and those forward contracts for deferred delivery. And so farmers are really going to have to work a little harder this year to get those extra cents out of the basis market. The other thing, so are you bearish or bullish right here?
I'm bearish. I mean, especially we've seen a big sell-off recently. Technically, this market is very bearish. We had the gravestone today. That that's clearly a bearish indicator. So I do think we're going to be going lower. Now might be a good time to price some of that grain.
Yeah, and I would echo those sentiments. The other thing I'm looking at is fundamentally exports are just pathetic. USDA is factoring about a 10 to 13% drop in corn and soybean exports year on year. Actual exports only 6 weeks into the marketing year, but nonetheless, they're 30 to 40% below last year. So we are well below what USDA's pace is needed to get those supply and demand numbers. So I'm looking for, either we need to see those exports improve substantially, which I don't think they will in the near term, or USDA is going to have to bump up those exports, those ending stocks as a result of lower exports. Again, more bearish sentiment for this market to try and digest.
Absolutely.
Hey, with that, we will see you on Tuesday. Have a great weekend and enjoy, hopefully, some good weather for harvest.